FHA mortgage delinquencies reach a record. It's been a record-setting summer for real estate.
It's been a record-setting 2020.
This is a bad record. That's led by New Jersey, according to Bloomberg. Realtor Mag, though, states that moratoriums keep foreclosures nearly non-existent. So two things happening here, Nicole.
We're just sort of at a standstill.
We've got a whole bunch of these delinquencies, but we have no foreclosures. How is that possible? So the FHA, which is the record that they're stating here on Bloomberg, obviously it's an affordable path to home ownership for many first-time home buyers. They're stating minorities and low-income Americans. It's now FHA has the highest delinquency rate in at least 4 decades. The share of FHA loans rose to almost 16% late payments on these FHA loans in the second quarter, which is up from about 9.7% the previous 3 months, and the highest level in records dating back to 1979, the Mortgage Bankers Association stated this week. The delinquency rate for conventional loans, by comparison, was only 6.7%. So 16% of the FHA loans out there are late on their payments. Now, a couple things going on. Realtor Mag says these moratoriums, which is like mortgage forbearance and these kind of things.
Well, it's not actually a mortgage forbearance. It's more of a foreclosure forbearance.
Okay.
They can't go into foreclosure.
They can't go into foreclosure at the state and local level.
Right.
Federal level.
I think they're giving a 12-month freeze on
foreclosures.
Thank you.
And so you've got that. You also have mortgage forbearance.
Right.
So my question is, and it doesn't state it here on Bloomberg, but my question is, if you took your forbearance as an FHA loan, does that also make you late?
Yeah, so scroll up to the top real quick. No, go down a little bit, right in the middle. State has also the biggest increase in overall late payment rate and forbearance, protecting many borrowers from foreclosures for now. So the forbearance is they're definitely playing. They're counting the forbearances in. Yes, absolutely.
Most of them are protected by the federal forbearance program, which borrowers with pandemic-related hardships can delay payments for as much as 1 year without penalty.
Yep.
As of August 9th, there was 3.6 million homeowners who were in forbearance, representing 7.2% of all loans.
Yep.
So there's people right now in FHA that are late, but they're not in forbearance because we only have 7.2%.
Right.
I don't understand that. The share has decreased for 9 weeks straight, so that number is going down.
Well, I think there's so much happening. I think forbearance is like a shorter amount of time, but the moratorium is giving you a year. I mean, if you're you can get the forbearance in some cases up to a year.
Oh,
is that what it's saying?
And I think that could be dependent on your bank.
I'm assuming because they were saying that it has to be COVID based. So I'm assuming that they're probably having to prove that they need a forbearance. Because I remember applying for forbearance back in 2008. Yeah. Right when like the whole.
Okay.
They let it during the forbearance period, which was like a 3-month period. We had to prove that we needed it, right? And then at the end of but during that forbearance period, they actually let us pay a reduced amount. But at the end of the 3 months, they concluded that we did not get approved for the forbearance. So on that 4th month, we actually had to pay our mortgage payment plus what they had decreased by. Yeah.
That's
so
brutal.
I don't think it's quite easy to get a forbearance, but maybe in this situation,
I think it's a lot easier. I haven't done enough homework on it. There's a YouTube channel, Meet Kevin, who really breaks down the forbearance quite well. He says, I mean, certainly if you're one, he says it is easy to state the claim that you're COVID impacted right now. So a lot different than 08.
Of course.
So shout out to that channel, anybody that watches that. But my point here is if you are late on your FHA loan, or you have clients who are late on their FHA loan, you should be looking into forbearance if you haven't already. Like, you should have done that months ago. I don't know why you would be late and not in forbearance. Side note there.
Yeah.
But here's the deal. Even as these mortgage delinquencies, these late payments that we're talking about, are climbing, the foreclosures are basically non-existent. Foreclosures, in fact, are way down.
Right.
Foreclosure filings are way down because they literally can't foreclose.
Freeze. Right.
If you look, and there's a great map here from ATTOM Data Solutions. It's a Realty Track and ATTOM Data Solutions report, which will show you in July 2020 the U.S. foreclosure starts by county. And we can populate that right here, and it's certainly in the Realtor Mag link if you look it up below.
So what is that red? Is that LA?
That is LA. LA had the highest, okay? So LA County had the most in July, okay? Foreclosure starts. See, now, in July, there was 8,892 properties received a foreclosure filing. That's down, though, from about 15,000, one out of every... down 83% from a year ago. There's the number. It's down 83% from a year ago.
Yeah.
So if these lates are at a record high for FHA,
right.
If other people are late, other people are in forbearance, and we don't know what's going to happen with the job market between now and, say, next year.
Right.
These foreclosures are piling up. We're faced with a situation where next year, sometime maybe third quarter, maybe fourth quarter of 2021, where we could see an explosion of foreclosures.
Right. I think, though, what you need to be very clear on, though, is even though if there are a significant amount of foreclosures, it doesn't mean that they're hitting the market, though, either. So I think we have to be clear there, because I think so many buyers are like, do I wait till next year till all these foreclosures happen? But even if people are foreclosing, it doesn't mean that they're then going to be available to buy. But if you also look at those numbers, I have so many questions reading this now, because it sounds like that there were so many that started in July, right? So it's almost like maybe those people were already late prior to COVID, right? Because you would think that if they're talking about this 12-month freeze and this 12-month forbearance period, you know, I mean, if there's a tick in July, I don't know. No,
I think this is all COVID related. Yeah. I think it looks like. I mean, I didn't have any information that we were creeping up on late payments before March. Maybe we were, because people lost jobs instantly.
Right.
So Matthew Gardner, chief economist of Windermere Real Estate, told Realtor.com, there will be some fallout, of course, but I don't think it will be enough to cause housing prices to drop. Here's the thing. Here locally, we've increased 16% since this time last year in housing prices.
How does that make you feel?
Someone that owns real estate in the area makes me feel good.
Yeah.
But obviously, if you're buying right now, it might not make you feel great. Here's the other thing. For homeowners, because this has happened a lot in the country, their home values have gone up. We could see, now, this economist is saying that he doesn't think house prices are going to drop even if we have a bunch of foreclosures next year in 2021. From this point until next year, 2021, with a lack of inventory, with a competitive market, we're seeing multiple offers, we could continue to see home prices rise. So even if they do, let's just say they do drop, we know if the interest rate goes up a point, real estate's going to drop 10%.
Of course.
Right? 1 point interest rate, real estate values drop 10%. Maybe the interest rates go up. Maybe we have a bunch of foreclosures and we drop 10, 15, maybe, please don't do it, 20%. But we'll just basically be erasing
back where we were.
The last 18 months of gains.
So it sounds like a bubble. I mean, we talk about bubbles. Usually bubbles last years, but this is like a quick little blip. Is what you're thinking.
I don't know. Well, yeah. I'm not thinking. I don't know about that.
I don't know about any of it. I mean, it
Bubble's
is very
a scary
interesting.
Word.
Bubble
it's like
is,
shanks and
well,
golf.
that's why. I mean, obviously, when you start hearing about 16% increases over a year, that's why I asked you how you feel, because that actually scares me a little bit. I mean, we like healthy markets. We like 4%. We like 5% over a year. Personally, again, when you hear 16%, it is a little scary. I can't deny it. But I agree with you. I think that. Again, and I feel like we've been talking about this the last few weeks, you know, even though the prices are increasing by the 16%, like you're saying, the interest rates have come down. So you're pretty much, you know, your monthly expense is pretty much the same. But I agree. I mean, I think if it does come down, we're just kind of back at where we were before, which was still a very healthy market. I mean, at least where we were, you know, 2020 was, you know, slated to be healthy anyway. So
the good news is we're going to be pacified here. I guess it's good news. I mean, I think a lot of people would rather rip the Band-Aid off on this economy, but they're printing so much money. They are not allowing foreclosures to happen. So for the next 12 months, you're pretty good. You've got time to make necessary moves, real estate investors.
You would hope that, though, the homeowners are doing what they need to do, too. I mean, if you're not paying your mortgage, like, again, there's just so many different situations.
If you're not paying your mortgage right now,
you got to really get your shit figured out. It's going to come quick.
If you're not paying or you're late, don't be like, well, they're not going to foreclose me for 12 months. I'll figure it out. I'll get a job. I would take advantage of these high home values right now, sell right now, and then go and take that cash, because if the bottom falls out and there's foreclosures next year, and if we can't get the economy back on track between now and next year, you could see a lot of foreclosures. It will have an impact on the market. And if you lose this 15, 10, 20% in home value gains that you've gotten the last year,
right,
you may be in a situation where you can't now sell, and then you're going into foreclosure, and then you're 7 years of bad credit.
Well, and then you just lose all your money.
Yeah.